And that's on the next topic of my next guest, because she says that the S&P 500 may fall as much as 9.9%, to be precise, before it starts advancing again. She's Ann Bartels. She's the head of technical market analysis at the Bank of America-Merrill Lynch. Ann, thank you for joining us. And very precise, 9.9%. What tells you we're headed in for that correction?
Well, we've been calling for a correction since January and February. Sentiment had really gotten too bullish, or what we like to look at is investors' intelligence percentage bears. When that drops below 20%, it's normally a sign that everybody's already in the market. So we've been looking for a pullback. I think we're in the pullback. The question is, have we reached the lows, or do we risk making newer lows? And I think we still have risk that we have to test 1249 on the S&P and possibly make a new low around the 1200 level.
Hey, Ann, it's Dominic here. One of the things that we're talking about in terms of a decline is who could pace that decline, and conversely, when things rebound, who paces the advance? What are the best sectors out there? Or who's going to lead this thing down, and consequently, who's going to lead things back up again once it hits that 1249?
Well, the cyclicals have really led the rally. So the risk, you've already started getting part of the correction. You've seen it in the early part of the year in consumer discretionary names, particularly the retailers. So I think you broaden that out, you hit tech, you hit industrials, hit more of the cyclical side. But I think they lead right back out again, because we're just looking for a correction in the context of the cyclical bull market that started in March of 2009. So we don't see any change in leadership. I think we get a very short-term tactical leadership out of the defensive sectors, but the market will go right back into the leadership sectors.
Why hasn't, though, this correction changed your forecast of 1,400 for the end of this year on the S&P?
No, it hasn't changed our forecast. We still think that we can hit 1,400 towards the end of the year. We just think that this is the pause that refreshes the market. And I'd remind your viewers, last year the market corrected peak to trough from April to July 17%. And yet the year turned out to be fine. So we're just looking for a correction of the rally that we've had since part of the July low. Okay. And then we still think the market has ability to get to 1,400.
Ann, tell me about oil. You say we're at some critical level, right, for a breakout to the upside?
Yes, we've already broken out in oil. Oil probably has one of the nicest charts in the overall market. It's been consolidating since 2009, and the breakout that we just saw, the first target is 118 to 120. The risk eventually is, if the Middle East doesn't settle down, that you get a spike near the all-time high of 147.
Hey, Ann, what about the rest of the other commodities there, the soft commodities, things like wheat, corn? Is this a cyclical market for all commodities or just oil right now?
It's been our base case since 2004 that the secular bull market is in commodities, and it's across all the complexes. They'll take turns in terms of leadership. In fact, what we've seen most of this year is the other parts of the commodity complex do extremely well, while crude oil actually lagged. Now we're seeing crude kind of participate in this rally. So we think all complexes are in a secular bull market, but will continue to trade off in terms of leadership.
Ann, let me just turn quickly to your chart here on Treasury yields for the 10-year. You're saying that it's going to test the 3% yield level. Why is that?
That's correct, because we broke down from a critical level from 3.25%. And that really leads to, I think, a pullback to around 3%, could possibly be 2.8%. This is important in our market outlook because it tells us that the market's going to shift more defensively into treasuries. But we think that this will be temporary. In the longer term, we still like stocks over bonds, but the market seems to want to have a little bit more defense in their portfolio.
Ann, thank you for joining us. Ann Bartels,
Thanks.
Bank of America-Merrill Lynch, head of technical market analysis, as mentioned, predicting a 9.9% correction on the S&P.